It is my pleasure to moderate today's 2026 Annual General Meeting of One Great Studio Company Limited for the period ending December 2025. Today, we are supported by none other than Learn, Grow, Invest. On behalf of the company, welcome to our shareholders and members of the media joining us online. Thank you for making the time to be a part of our conversation about where this company has been and, more importantly, where it's headed. Before we get into the business of the day, here's a quick run-through of how voting and questions will work this afternoon. Shareholders and attendee microphones will stay muted for the duration of the meeting. During the Q&A segment, please raise your hand to indicate that you'd like to ask a question. Once you're acknowledged, you will be unmuted, and we also welcome you to submit a question in the Q&A tab at the bottom of your screen. To keep things moving for everyone, we'll only take 2 questions per shareholder at that time. But if we have time, we'll circle back if time allows. When asking a question, please state your full name, and if you're holding a proxy for someone, please state their name as well. The chair will direct each question to the best person to respond. Once a resolution has been moved or seconded by shareholders representing the required quorum, all resolutions will be voted on through Zoom, with shareholders having 60 seconds to cast their vote. To move or second a resolution, please use the raise hand feature. Chairman, our company secretary, Mrs. Rachel Brownie, confirms that we have a quorum present in keeping with Article 77 of the company's articles, which requires that at least 3 members are present, together holding at least 1/3 of the nominal amount of company-issued shares. She has also confirmed that we have 5 proxies on record. Chairman?
Thank you, Danielle. I now declare this meeting open. Good afternoon, everyone. I'm John Bailey, Chairman of the Board of One Great Studio Company Limited. It's a real pleasure to welcome you to our 3rd Annual General Meeting as a publicly listed company. As in the past years, we're joining you virtually. Some of your directors are online, others are here with me in the room. On behalf of the board, I'm glad to welcome every shareholder and guest with us today. Let me introduce the board of directors joining us in person and online. Jacqueline Sharp, Non-Executive Director and Chair of our Audit and Risk Committee. Simone Bowie-Jones, Non-Executive Director and Chair of our Remuneration Committee. Rachel Brownie, Executive Director and Company Secretary. Javane Brownie, Executive Director and Chief Executive Officer. Gina DeLissa, Executive Director and Chief Operating Officer. Our Non-Executive Director and Chairman of Corporate Governance Committee, Mark Ramsey, and our newest director, who joined the board this year, Peter Lloyd, couldn't be with us today, but they've asked us to pass along their apologies and their support for this meeting. Although Peter couldn't join us today, I nonetheless want to take the time to formally welcome him to the 1GS board. Peter joined us this year, and I'd like the shareholders to know we're genuinely glad to have him. He brings extensive senior marketing and commercial leadership experience across multiple markets in the region, and we're already seeing the value of that perspective in our boardroom discussions. We look forward to his continued contribution as the company grows. Your directors bring a well-rounded set of skills to the table, and you'll find their full profiles on page 16 to 18 of the annual report and on the 1GS website. I'd also like to extend a warm welcome to our auditors, Crichton Mullings and Associates, represented today by Mr. Darshan Dodd, and to our legal advisors, Myers, Fletcher and Gordon, represented by attorney Shanil May Brown. Welcome to our registrar, the Jamaica Central Securities Depository Limited, members of the media, and our other distinguished guests, and of course, our own team joining us today. Finally, please join me in welcoming the management team of One Great Studio Our CEO will introduce them a little later in the proceedings.
Chairman, I'll now invite Gina Delisa, our COO, to bless today's proceedings.
Thank you, Daniel. Let us pray. Lord, we thank you for another day that you have made. We're so grateful for your kindness and your goodness towards us. Your mercies are indeed new every morning, and your faithfulness is sure. Thank you for your leadership over this business, over these many years. We pray for the proceedings ahead. Bless this time together, Lord, with our stakeholders as we discuss the affairs of this business. Be glorified and honored. In Jesus' name, amen.
Thank you, Gina. Shortly, we'll hear from our CEO, Mr. Javane Brownie. He'll walk us through the company's financial performance in 2025 and the first 2 quarters of 2026, followed by a short video. Before we move into the question and answer segment, we'll open the floor to shareholders to join us in that Q&A session. We may not get to every question, but every question submitted will be reviewed and answered after. Chairman?
Thank you, Danielle. The notice of this annual general meeting was dispatched to all shareholders. It was published on the Jamaica Stock Exchange's website and on the company's own website ahead of today's meeting, in keeping with our statutory requirements. If there is no objection, I'd like the shareholders' permission to take the notice convening this meeting as read. As stated previously, the moving and seconding of resolutions can be done using the raise hand feature. The motion before you is that the notice convening this meeting be taken as read. May I have a motion?
Simone Bowie-Jones.
Moved by? Sorry.
Gina Delisa.
Seconded by?
Jody Ann Spence. Jewel Ann Spence, my apologies.
Thank you. Those in favor? Those against?
Chairman, I can confirm that the company secretary has the majority vote online and offline.
Thank you, Daniel. The votes in favor have it. I declare the motion carried. I want to start by recognizing the work of our board and its committees over the past year. 4 board meetings were held during 2025, and I'm pleased to say attendance across the board remains strong throughout, which is a reflection of the seriousness which our directors take their responsibilities to this company, and to you, our shareholders. As a board, we remain committed to strong governance, transparency, accountability, integrity, and compliance, and to managing this business in the best interests of all our stakeholders. I'll also use the moment to welcome our latest brand to the company, Farmhouse Creative. Special welcome to Vanessa and her team, who bring strength in brand strategy, creative direction, and social media. Farmhouse has earned the trust of clients across hospitality, real estate, and lifestyle brands, and we're excited to see what this partnership builds. During the 2025 financial year, we also remain committed to timely communication, investor transparency. I'd encourage all stakeholders to visit onegradestudio.com/investors, where you'll find our quarterly reports, each paired with a quick summary that highlights the key numbers in a clear, digestible format. Thank you, and I'll now hand back to the moderator, who will walk through today's formal proceedings.
Thank you, Chairman. The first item of business today is to receive the audited accounts for the year ended December 31st, 2025, along with the reports of the directors and auditor. Before we put the reports to a vote, our auditor will read their findings, and our CEO, Javane Brownie, will then present the company's financial performance for 2025, as well as an update covering the first 2 quarters of 2026. After that presentation, Javain will introduce an exciting short video before we move into discussion. Once that's complete, the chairman will open the floor to shareholder questions and answers on the auditor's report, the CEO's presentation, and the video together. As a reminder, on the Q&A, raise your hand, and once acknowledged, you will be unmuted. But if you'd rather, submit your questions in the Q&A tab at the bottom of your screen, and we'll read those aloud. We'll do our best to get to as many questions as time allows. If you run into any technical difficulty participating, email investorrelations@onegreatstudio.com, and we'll route to the chairman or company secretary immediately. The remaining items of business will cover the re-election of directors, fixing directors' remuneration, and the appointment of auditors for the year ending December 31, 2026, along with the authorizing of directors to fix the auditors' fees. I will now hand over to you again, Chairman.
Thank you, Daniel. We now invite Mr. Darshan Dodd, representing our auditors, Crichton, Mullings and Associates, to read the report of the independent auditors. The key audit matters for 2025 financial year are set out in the financial statements, beginning on page 54 of the annual report. Darshan?
Thank you very much, Mr. Chairman. Good afternoon, everyone. Independent Auditors Report to the members of One Great Studio Company Limited. Report on the audit of the consolidated financial statements. Opinion. We have audited the accompanying financial statements of One Great Studio Company Limited, the company, and the consolidated financial statements of the company and its subsidiaries, the group, set out on pages 10 to 48. These financial statements comprise the group and company statements of financial position as of December 31st, 2025, the group and company statements of comprehensive income, the group and company statements of changes in equity, and the group and company statements of cash flows for the year then ended, and a summary of material accounting policies and other explanatory notes. In our opinion, the accompanying separate and consolidated financial statements give a true and fair view of the financial position of the company and the group as of December 31st, 2025, and of its separate and consolidated financial performance and cash flows for the year then ended in accordance with IFRS accounting standards and the Jamaican Companies Act, the Act. Basis for opinion. We conducted our audit in accordance with international standards and auditing ISAs. Our responsibilities under those standards are further described in the auditor's responsibilities for the audit of the financial statement section of our report. We are independent of the company and group in accordance with the International Ethics Standard Board for Accountants International Code of Ethics for Professional Accountants, including International Independent Standard, IESBA Code. We have fulfilled our other ethical responsibilities in accordance with the IESBA Code. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Key audit matters. Key audit matters are those matters that in our professional judgment were of most significance in our audit of the consolidated and separate financial statements of the current period. These matters were addressed in the context of our audit of the consolidated financial statement as a whole, and informing our opinion thereon, we do not provide a separate opinion on these matters. Key audit matter number 1, revenue from contracts with customers. As described in Note 3I, the group recognizes revenue from contracts with customers under IFRS 15, revenue from contracts, when the services have been performed by the group. The standard also requires management to identify performance obligations in contract services and determine the timing of satisfaction of the performance obligations. It also requires management to determine whether it acts as a principal or agent in executing the contracts and if there are significant financing components included in the promised payment amount. How the matter was addressed in our audit. We have obtained and reviewed management's assertions and assessed the underlying assumptions used to support the calculations as required by IFRS 15. We also evaluate the appropriateness of the group's revenue recognition policy in relation to the requirements of the standard. We reviewed management's computations and independently reviewed a sample of contracts and evaluated them as follows. We obtained and review signed contracts to validate that legitimate contracts exist with customers. We verify the transaction prices that are explicitly stated in the contracts associated with the relevant performance obligations. We obtain and reviewed invoices on a sample basis along with supporting reports confirming evidence of work carried out and performance obligations met. Additionally, where bundled services were offered, we assessed whether the transaction price should be allocated to each performance obligation. Based on the above, we verify that revenue was properly recognized in the current period. We also review the disclosures for compliance with IFRS 15. Key audit matter number 2, expected credit loss on trade receivables. The group is required to recognize expected credit losses, ECL, on trade receivables, the determination of which is highly subjective and requires management to make significant judgment and estimates, including a determination of appropriate variables and assumptions used and the application of forward-looking information. The risk of material misstatement increases as significant management judgment is used in determining the appropriate variables and assumptions used in the ECL calculations. How it was addressed in our audit. Our audit procedures to address a key audit matter relating to the expected credit loss on trade receivables included the following: obtaining an understanding of the model used by management for the calculation of expected credit losses on trade receivables, testing the completeness and accuracy of the data used in the ECL models to the underlying accounting records on a sample basis, reviewing the ECL model to assess appropriateness of the group's impairment methodology, management's assumptions, and compliance with requirements of IFRS 9 financial instruments, evaluating the appropriateness of the economic parameters, including the use of forward-looking information, testing the accuracy of the ECL calculation, testing the recording and aging of trade receivables, assessing the adequacy of the disclosures of the key assumptions and judgments for compliance with IFRS 9 financial instruments. Based on the procedures performed, we determined that management's assessment of expected credit loss on trade receivable appears reasonable. Key audit matter number 3, intangible assets impairment assessment. The group has intangible assets of $440.5 million arising from the acquisition of High Voltage Digital LLC and DRT Communications Operations, which represents 61% of total assets as at the year end. The annual impairment assessment requires management's judgment and estimation in determining estimated future earnings from the assets of the subsidiary, taking into consideration the inflation rate, the economic growth rate, and other underlying assumptions. Our audit procedures to address the key audit matter relating to the impairment of intangible assets assessment included the following. We have reviewed management's assertions, including the identification of the underlying cash-generating assets, and we have assessed and reviewed the historical performances and compare actual results to the approved budget. The analysis of the external and internal environment was taken into account in the assessment of the subsidiary's performance. Based on the procedures performed, management's assessment of intangible asset impairment appears reasonable. Key audit matter number 4, accounting for business combination, acquisition of DRT Communications Limited. As detailed in Note 27 to the financial statements, on February 18, 2025, the company completed the acquisition of the business of DRT Communications Limited for a total potential consideration of 115 million Jamaican dollars. The transaction has been accounted for as a business combination in accordance with IFRS 3 business combinations. The total consideration comprises an initial cash payment of 80 million and a contingent consideration earnout of up to 35 million payable over 3 years based on the acquired business line achieving specific profit targets. The fair value of this contingent consideration as at the acquisition date requires significant judgment, particularly in forecasting acquired business lines' future net profits. A key element of the transaction was the acquisition of identifiable intangible assets, primarily customer-related contracts and relationships as listed in Schedule 3 of the agreement. Management was required to exercise significant judgment in estimating the fair value of these intangible assets, as the final purchase price allocation is dependent on detailed valuations. Due to the complexity of the purchase price allocation, the estimation involving valuing the contingent consideration and the materiality of the transaction to the financial statement, this was considered a key audit matter. Our procedures to address the key audit matter relating to accounting for the business combination intangible assets included the following. We have read the sale of business agreement to understand key terms and conditions, including the identification of assets acquired, liabilities assumed, and the consideration structure. We have assessed the reasonableness of the company's valuation of the contingent consideration. We evaluated the key assumption used in the company's forecast, including projected net profits for the public relations and media monitoring business line. We have assessed the completeness of the identifiable assets, including the specific intangible assets listed in the agreement. Example, material contracts and intellectual property, by inspecting the acquisition agreement and related schedule. Based on the procedures performed, we concluded that management's provisional accounting for the business combination and related disclosures appear reasonable. Other information. Management is responsible for the other information. The other information comprises information included in the annual report, but does not include the consolidated and separate financial statement and our auditor's report thereon. The annual report is expected to be made available to us after the date of this auditor's report. Our opinion on the consolidated and separate financial statement does not cover the other information, and we will not express any form of assurance conclusion thereon. In connection with our audit of the consolidated and separate financial statements, our responsibility is to read the other information identified above when it becomes available and, in doing so, consider whether the other information is materially inconsistent with the financial statements or our knowledge obtained in the audit or otherwise appears to be materially misstated. When we read the annual report, if we conclude that there's a material misstatement therein, we are required to communicate with the board of directors. Responsibilities of management and those charged with governance for the financial statements. Management is responsible for the preparation of consolidated and separate financial statements that give a true and fair view in accordance with IFRS accounting standards and the Act, and for such internal control as management determined is necessary to enable the preparation of consolidated and separate financial statements that are free from material misstatements, whether due to fraud or error. In preparing the consolidated and separate financial statements, management is responsible for assessing the group's and company's ability to continue as a going concern, disclosing, as applicable, matters related to going concern and using the going concern basis of accounting, unless management either intends to liquidate the group or to cease operations or has no realistic alternative but to do so. The board of directors is responsible for overseeing the groups and companies' financial reporting process. Auditor responsibilities for the audit of the financial statements. Our objectives are to obtain reasonable assurance about whether the financial statement as a whole are free from material misstatement, whether due to fraud or error, and to issue an auditor's report thereon that includes our opinion. Reasonable assurance is a high level of assurance, but it's not a guarantee that an audit conducted in accordance with ISAs will always detect a material misstatement when it exists. Misstatements can arise from fraud or error and are considered material if individually or in the aggregate they could reasonably be expected to influence the economic decisions of users taken on the basis of these financial statements. A further description of our responsibilities for the audit of the consolidated and separate financial statement is included in the appendix to this auditor's report. This description, which is located at pages 8 to 9, forms part of our auditor's report. Report on additional matters as required by the Act. We have obtained all the information and explanation which, to the best of our knowledge and belief, were necessary for the purposes of our audit. In our opinion, proper accounting records have been maintained so far as appears from our examination of those records and the consolidated and separate financial statements, which are in agreement therewith, give the information required by the Act in the manner required. The engagement partner on the audit resulting in this independent auditor's report is Larry Mullins. Signed, Crichton Mullins and Associates, Chartered Accountant, Kingston, Jamaica, March 17, 2026. Appendix to the independent auditor's report. As part of an audit in accordance with ISAs, we exercise professional judgment and maintain professional skepticism throughout the audit. We also identify and assess the risk of material misstatements of the group and company financial statements, whether due to fraud or error, design and perform audit procedures responsive to those risks, and obtain audit evidence that is sufficient and appropriate to provide a basis for our opinion. The risk of not detecting a material misstatement resulting from fraud is higher than one resulting from error, as fraud may include collusion, forgery, intentional omission, misrepresentations, or the override of internal control. We also obtain an understanding of internal control relevant to the audit in order to design audit procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of the group's and company's internal control. We also evaluate the appropriateness of accounting policies used and the reasonableness of accounting estimates and related disclosures made by management. We also conclude on the appropriateness of management's use of the going concern basis of accounting and, based on the audit evidence obtained, whether a material uncertainty exists related to events or conditions that may cast significant doubt on the group's and company's ability to continue as a going concern. If we conclude that a material uncertainty exists, we are required to draw attention in our auditor's report to the related disclosure in the financial statements, or if such disclosures are inadequate, to modify our opinion. Our conclusions are based on the audit evidence obtained up to the date of our auditor's report. However, future events or conditions may cause the group and company to cease to continue as a going concern. We also evaluate the overall presentation, structure, and content of the group and company financial statement, including the disclosures, and whether the group and company financial statement represent the underlying transaction and events in a manner that presents a true and fair view. We communicate with the Board of Directors regarding, among other matters, the planned scope and timing of the audit and significant audit findings, including any significant deficiencies in internal control that we identify during our audit. We have obtained all the information and explanations which, to the best of our knowledge and belief, were necessary for the purposes of our audit. And in our opinion, proper accounting records have been maintained so far as appears from the examination of those records, and the group and company financial statements which are in agreement there, with give the information required by the Act in the manner required. From the matters communicated with the Board of Directors, we determine those matters that were of most significance in the audit of the consolidated and separate financial statements of the current period and are therefore the key audit matters. We describe these matters in our auditor's report unless law or regulation precludes public disclosure about the matters, or when, in extremely rare circumstances, we determine that a matter should not be communicated in our report because the adverse consequences of doing so because the adverse consequences of doing so would reasonably be expected to outweigh the public interest benefits of such communication. Thank you very much, Mr. Chairman. This is the end of the auditor's report.
Count 25, together with the reports of the directors and auditor, have been circulated and are now before the meeting for discussion. Before we move to the resolutions, I'd like to invite our CEO, Mr. Javane Brownie, to walk us through the company's performance, both for the full 2025 financial year and for the first 2 quarters of 2026, and then to introduce a short video on where the business is headed. Javane?
Just a small technical challenge. We'll be right with you. Ladies and gentlemen, as we wait for Mr. Brownie to
Are you
come
hearing me
online,
now?
just reminding you to submit your questions in the chat or wait to be unmuted.
I switched off that, baby.
Javane,
Yeah.
you can go ahead now.
Yeah, sorry. All right. Okay, here we go. So today we're launching something special, right? Which is our dedicated investor relation website. We have been wanting to have a separate page for this, for a long time. It's been coupled in with the agency sites from the IPO till now. And so we're launching that right now. We've put a lot of time and thought into it to make it user-friendly, easy to use, and to also have a lot of information here that will be valuable to our shareholders and the investing public in general. So please, when you have a chance to win on this meeting, you can go and check it out. investor.onegreatstudio.com. That's our dedicated investor relations website. So we're going to start off by just going through a quick overview of our financial year 2025, looking at 5 years performance first. Revenue grew consistently from 2021 to 2023. We had a peak of $461.1 million revenue in 2023. We had a dip in 2024 to 34.3, and a 10% increase year over year, 24 to 2025. Profit, on the other hand, there's a slightly different story. We had a peak again in 2023, dip in 2024, and we had a net loss in 2025. I'm going to talk a little bit more about the net loss in a few. First, I want to just go through and just share with you some of our key client metrics. You'll notice these numbers are things that we share with you every quarter. We think these are things that speak to the health of the business and where the business is at. So as an investor in OneGS, you can just track these numbers and you can know how well the team is doing at delivering the actual service. So here we can see our total clients served in the year went up to 135 from 130 in 2024. So that's positive movements in the year. Our average client spend, 2.8 million compared to 2.6 million in 2024. And our revenue from retainers up at 72% of revenue. So that means 72% of our revenue comes from recurring contracts with retainers from clients, right? A quick summary here on the financials. total revenue of 376 million, total assets 677 million. This is at December 31st, 2025. Total equity of 585 million and net loss of 25 million, and cash ratio including investments of 2.2x. All right, so here we're going to talk about the income statement or profit and loss account. So here you can see when we started dip in revenue in 2024, we had a choice to make. It was either we're going to pull back, preserve margin, or we're going to push forward for growth, and we chose growth. And with that came some of what we did, right? We built out the host of agency brand strategy, and the first step in that was acquiring DRT, right? So we have acquired high voltage SEO previously, second acquisition, which is DRT. And then to support that, which is the future acquisition and the future brands that will add to the group, we invested in building out our shared services, right? And so our gross profit took a hit. You can see it here, right? Even though the revenue went up, gross profit went down. And the reason for that is two things. One, our SEO revenue, which is traditionally higher margin, that was down. So the percentage of SEO revenue was down from 2024 to 2023. And then the addition of DRT, what we have there is that we have a bigger team, and we also have technology costs, right? Because we have a media monitoring arm of the business, so we have an investment in technology there as well. So those two things there combined to push the gross profit down. And then on the net profit side, we had increases in our OPEX, which was coming from mostly from the increase from the investments in shared services. But again, that was intentional. Our plan was to build something that we can really go and grow with moving forward. And so we invested in acquiring a company, integrating that company that came with people and infrastructure and technology. And we also invested in our shared services. And at the end of last year, we said to our investors through our report that we expect that to stabilize in 2026. We don't expect that to continue, right? And we expect to start seeing the fruits of that investment this year, which the first half of the year has already started to show. So we'll look on that in a few. On the balance sheet side, we can see it was fairly stable on the total asset side, down by just a fraction of a percent. Our current assets are down a little bit more, 36%. Most of that is from the investment in DRT, because that was at $80 million cash investment at the time. And so that would impact our current assets and our cash and cash equivalents as well. Our total liabilities went up. Again, Darshan spoke about that contingent liability arising from the DRT acquisition. That's the thing right there. And our shareholders and equity was down 4% from 609 to 585.1 at the end of our financial year 2025. So let's turn our attention to our 2026 year to date right now. As you can see, we're looking at that 6 months, the first 6 months of 2026 compared to 6 months in 2025. We have revenue going up 17%. I think a big part of that is our different brands contributing. 1GS growing the 1GS brand. We have the full integration of DRT here as well. And HE actually held its own. It didn't reduce year over year. So it's leveling off right here right now. So that's good. And here you can see the impact of our margin initiatives here. You can see our gross margin moving up, our gross profit moving up from 58 to 82 million. And then you can see our gross margin as well moving from 32 to 39 million. That's a big step for us because the first time in a while that we see our gross margin going in the right way. It's something that we've been very focused on in the business because we think in order for us to see the returns that we want in this business, it starts with the margin. So everything starts with the margin, and our teams have been hyper focused on ensuring that they're extracting margin when we're delivering services. And you can see a return to profitability with a net profit margin of around 11%, with net profits of 23.9 million, 39 million swing year over year. All right, and let's take a quick look at the balance sheet. So here we can see balance sheet, total assets up 3.4%. Our current assets up as well. Cash and cash equivalents up. Current assets, non-current assets down, sorry. And our shareholders' equity up around 4% as well. So more or less, you can say we have a healthy balance sheet. We're still in a position where we've been funding acquisitions out of our cash reserves, not through financing options. And so we're still in a place where we have flexibility and we're positioned for future growth. I wanted to spend a little time just introducing again our House of Agency brand strategy. I know some of us will be familiar with this, some of us it might be first time you're hearing it, but I want to explain it to everybody so we're super clear on what we're building at 1GS. So we consider ourselves to be a house of agency brands. And what that means is that we own and operate multiple brands. And each brand is positioned to own a specific service niche, right? So we have 1GS, they're focused on digital and websites. We have high voltage SEO, they're focused on SEO. We have DRT Communications, which is focused on strategic marketing, communications, PR, and media monitoring. And now recently we added Farmhouse, which we'll talk a little bit more about later. So each of those brands are positioned with their own branding, own positioning in the marketplace, and they attract customers, right? And then those brands, they leverage or they run on top of, they operate on top of a shared service platform, which has HR, operations, finance, right? And so that really is a shared services. So they use a common set of resources to run their businesses. And what this does for us is that it allows us to have diversification of revenue and it balances the risk so that we're not relying on a single source of income. And so you can see this clearly when we look on our revenue mix over the last 4 years, right? So from 2023, you'd see high voltage SEO at about 75% of our revenue. You see 1GS at about 25, and you see 1GS continuously growing. And yes, HV is shrinking as well. But at the same time, what we're doing is trying to make sure this is intentional as we add more brands. What we want to see is more balance across our portfolio. So that no single brand can really drag the company down. And that way, and then no single brand is also responsible for all the growth. So what we want to have is balanced revenue, diversified revenue, and that's how we're building this out in the future. So you can see 1GS growing, DRT holding firm there and growing as well. So this is what we're doing, and we're going to keep adding more brands, and that's a big part of how we plan to grow in the future. And now I'm also excited to talk a little bit about Farmhouse Creative, which is our new brand. You might have seen that if you've been watching the news over the last couple of weeks. We announced this acquisition on August 5th. So Farmhouse Creative is now a 1GS brand. Farmhouse is led by Vanessa. Okay, am I back? All right, sorry about that. All right, so it was a $36 million investment. We're very excited to welcome Farmhouse to the team, and you'll hear a little bit more from Vanessa as we go through this presentation. So, in a quick thing on the industry outlook, technology is rapidly advancing. We see a lot of technology coming out, the introduction of AI, LLMs, all that's there. With that advancement of technology, we expect to see some services that agencies have sold historically to be commoditized. But we also expect to see omnichannel marketing becoming more important and being a big differentiator for us here at 1GS. That means really being able to serve a client and help them on multiple platforms. So we're not just focused on one thing, but we can offer a wider, deeper breadth of service. And connected to that, we think we'll see consolidation opportunities in a fragmented market. The Caribbean has a lot of agencies focused on a specific niche. And so not many agencies have the depth of service that we have. Some people might say they do, but the truth is they're stronger in one area or another. Where through our culture brand strategy, we are we're actually solid in all these areas, and that's a big part of why we build out the host brand strategy. The way that we do is because the brands get to focus on their service area to develop the depth that they need to to the experts there, and then we pull them all together to serve our clients. So this is kind of what we see when we look in the industry, when we look in the future, and like how we think the market is changing, and these particular trends shape how we plan, how we strategize, and how we build the company moving forward. And I just wanted to, this is my last slide I'm going to talk about. And for me, it's just really a testament to how this company has evolved and changed over time. And as we look forward and we look at what the industry outlook is saying, we have to evolve and we have to keep evolving and changing over time. And I'm thankful that we have a team that has a track record of evolving and changing and growing and not just staying still, because that's how we've grown the business in the past. And that's how we're going to continue to grow the business in the future. So we've adapted services. Before we had brands. In 2012, when we started out, we were just websites and design. Clients started asking us, it was taking us long to launch a site because we were waiting on content from the clients. And so we added that to the service. So we started writing the content for them. And then over time, people said, you know what, you're doing such a great job with our web presence. Could you manage our social source? We said, sure. And then over time, people started to say, you know, you're doing such a good job doing that. Could you manage our digital ads for us? And we said, sure. And so over the years, we actually grew from adding new service lines, adding new business lines, adding new services within the 1GS brand. And then since 2022, when we acquired high voltage, we've kind of accelerated that strategy through the additional brands, right? So instead of just starting from zero with a service line, we start with a full-fledged business in a service line. So in 2022, you can see we're evolving our brands with the additional high voltage SEO. And in 2025, we added DRT communications. And now in 2026, we're adding farmhouse. So that's really, you know, how we see this business in the past evolving. And we think we're well positioned to continue evolving. So we have great things ahead. And so that adaptability that we've already shown that we can do is what we're going to take into the next part. And I don't really want to talk about this anymore. Instead, I'm going to hand this over to the team. Jeremy is going to share a video for you, and you can, you know, see the team. You can meet all the different teams. They'll talk a little bit about where we were last year and what we've been doing this year, and also how we see the future and how we move ahead at 1GS here. Jeremy, you have the video?
'25 was a year of building. Profitability took a hit, but I want to be clear about why. That's not a story about the business shrinking. It's a story about the business making strategic investments. We fully integrated DRT communications into the company, strengthened our shared services infrastructure, and expanded our leadership team. Those are the kind of investments you make when you're thinking long-term, not just about the next quarter. The fruit of this is already showing up in the numbers this year, 2026. One Great Studio, High Voltage Digital, DRT Communications, and now Farmhouse Creative each have their own lane, their own expertise. But we are all working together more closely than ever, offering a more robust and diversified suite of services all under one roof. That's the whole idea behind our host of agency brands. And in 2025, we took the time to shore up the foundations for sustainable growth.
This strategy is no longer just theory. It's been tested and proven. Back in 2023, SEO contributed close to 3/4 of our revenue. In 2025, it was just a third, as the industry shifted and we worked through repositioning the brand. For a single brand agency, that kind of shift would have been an existential problem. For us, it wasn't. Growth across digital, web and apps, and additional DRT meant that even as revenue dipped through that transition, we returned to growth in 2025. And we're on track to build on that in 2026. Yes, it slowed us down, and it came with real costs. But our ability to bounce back is directly connected to our house of agency brand strategy working its way through the business. Today, that means no single brand carrying the whole group and no single shift able to put the whole business at risk. That's the portfolio working the way it was designed to. With that, let me introduce you to our brands and the great team leading them.
Across the group, our client experience strategy is simple. Make us the kind of partner our clients don't want to work without. And I get to see that up close in the brand I lead, One Great Studio, our digital agency. We had a pretty great year. Revenue grew, recurring revenue grew, and average client spend grew. That last one is my favorite, because when clients choose to do more with you, it tells you you're doing something right. We built websites for some of the region's most recognizable companies. And for a listed company, a website isn't just a marketing project. It's where an investor goes to understand your business and where a customer decides whether they trust you with theirs. A few of those websites won awards last year. But what matters just as much is what happens after launch. We're still there, supporting our clients and thinking about what they might need next. That's how our website DPA compliance package came about. We saw what the Data Protection Act would mean for our clients and built a service to help them meet those obligations. We've also run digital ad campaigns across 27 countries. Some of those accounts have been with us for years, because that kind of relationship isn't automatic. You have to earn it year after year. And that's really the story of the past year. Do good work, earn more trust, use that trust to do more for the client. And more doesn't just mean more from One Great Studio anymore. It means DRT, high voltage, farmhouse. We're building a client experience where whatever they need next, the answer is already in the room.
For those of you who don't know DRT Communications yet, we're the strategic communications, PR, and media intelligence brand inside the 1GS family. We've been doing this since 2008, and we've worked with well over 100 clients, offering a myriad of corporate communication services, crisis management, media monitoring, and analytics. February 2025 was a big moment for us. That's when DRT officially joined One Great Studio, and it's been a natural fit. Our PR, corporate communications, and media monitoring combined within the group has us producing more together than we could have done on our own. And honestly, it feels like we've become one team rather than two organizations sharing a building. 2025 kept us busy, that's for sure. Corporate communications, preparing for an IPO which launched in 2026, event planning, project management, and communication support for AGMs and major announcements. We've been helping clients manage the moments where the stakes are high, the message has to be strategic, impactful, clear, and land just right. Looking ahead, our focus is on helping more clients not only communicate effectively, but to truly listen to what's being said about their brand and their industry. And that's where technology comes in too. We're building out our media monitoring capability even further with AI native tools that don't just stop at tracking what's being said. They'll connect straight into communication strategies and creative output so that the same team that tells you what and where your conversation about your brand is will help you shape your next communications move.
2025 was a year of real change for high voltage SEO. Search itself shifted under our feet, starting in 2024. Evolving algorithms, AI search, changing user behavior led to a decline in some of our traditional SEO work. And we felt it. But here's the thing, we didn't wait it out. We repositioned, and quickly too. Ranking on page 1 of Google isn't enough anymore. You need to be visible everywhere discovery happens. In 2026, that's exactly our focus. We've refined our approach to meet search where it's actually going. Conversational search, multi-surface discovery, and agentic commerce, where tools like ChatGPT, Claude, and Perplexity are increasingly influencing what people find and buy. While adding new things to the mix, we continue to optimize for search, including AI overviews, product feed, and Google Shopping visibility, with tighter alignment between organic and paid search. We've been running controlled, science-backed SEO experiments since 2014, and we've helped rank over 100 businesses on Google and now on AI engines too. Search isn't disappearing, it's just showing up in more places, and we intend to be there.
Hi everyone, I'm Vanessa, the founder of Farmhouse Creative, and we're one of the newest additions to the One Great Studio family. Although clearly, Farmhouse isn't the only new addition happening around here. I founded Farmhouse back in 2023, and following the acquisition, I'll continue to lead the brand while also taking on a new role as Director of Brand and Creative across the group. Farmhouse has always been a hands-on, strategy-led agency focused on understanding our clients, building strong relationships, and creating great work. What excites me most is that we get to keep doing what we do best, but now with access to more technology, more data, and broader capabilities. Our goal is to become the group's dedicated creative, social, and brand strategy arm, while continuing to grow the Farmhouse brand. For me, joining One Great Studio is really about strengthening what we can offer. Our clients' needs are evolving. They need creativity, strategy, data, and technology all working together. And now we're better equipped to deliver that. I'm really excited about what's ahead for Farmhouse as part of One Great Studio.
I'm Rachel, and I lead the shared services team. We handle the core business functions like admin, operations, finance, and HR, so our brands can stay focused on serving our clients. This past year was a big one for us behind the scenes. We invested in strengthening the infrastructure that allows every brand, One Great Studio, High Voltage, DRT, and now Farmhouse, to scale. Every time we add or grow a brand, we don't have to rebuild those essential functions from scratch. The infrastructure is already there. It's not always the most visible or glamorous part of the story, but it's a big part of what makes this model work and what allows us to keep growing together.
In 2025, we ran our first ever Do Good Pickle Tourney in partnership with Miles Fletcher and Gordon. This is a corporate charity event merging wellness, networking, and philanthropy. We brought together Jamaica's business and creative leaders for an afternoon of spirited competition, all in support of the Jacksonville Primary and Infant School and High Auburn Basic School. We brought together more than 40 participating business teams and over 30 sponsors for a day of pickleball, community, and lots of fun. More importantly, together, we raised over $2.6 million. That's roughly $1.3 million to each school, providing the much needed resources that these kids and their teachers deserve. This tournament was such a great testament to the type of good we can do together as a business community. We also kept up our tradition of giving uniform grants to matriculating students and bringing Christmas gifts to the kids at Jacksonville Primary and Infant School. Do Good isn't a once-a-year headline for us. It's something we try to show up for as much as we can.
There's a lot of noise around our industry right now.
Why pay people when AI can do it?
The agency model is dead.
Not quite.
Because clients don't pay to have an agency.
They pay to get customers.
They pay to influence perception.
They pay to have someone help them move their business forward.
That hasn't changed.
Technology will, the platforms and tools will.
Here's one thing we're betting on.
When something actually matters, people still choose people.
AI can generate, it can analyze, it can move faster than any human. But accountability, judgment, trust, those still belong to people.
That's why we're human first. This industry has a reputation of burnout, late nights, weekend work, unrealistic expectations. We don't think that's the price of great work.
From day one, we believe something simple. Crazy isn't the norm here, it's the exception. Because when great people stay, knowledge compounds. Teams get better, the work gets better. So if we're not asking people to work longer, how do we grow?
By putting AI to work beside them so they can do more. We're evolving to be AI native, and that means changing how we work, not just adding AI to what we already do.
AI handles the repetition, our people, they bring the judgment, the creativity, the cultural understanding, the strategy, and the why. Because faster isn't always the goal. Great work is.
Technology will keep evolving, channels will change, platforms will change, and so will we. Sometimes that means reinventing a brand. Sometimes it means acquiring or launching one.
Sometimes it even means building something entirely new. We're not attached to today's tools. We're committed to tomorrow's outcome. Our house of agency brand strategy is built to adapt. And that's exactly what we've been doing.
People ask, what's the agency of tomorrow and what will it look like? For us, it looks like this.
Human first, AI native, built to adapt.
Not because it sounds good on paper, because it's already how we're building OneGS.
The future belongs to those who adapt. But how you adapt matters. Don't be greedy, think long term, do good.
You to Juvane and the entire team for the fantastic presentation, which brought so much insight. And of course, for the video presentation put together by our video production team here. We'll now open the floor for questions, both from shareholders joining, members of the media. You're welcome to ask questions on the auditor's report, the CEO's presentation, and anything on the video that you would like. I do see a few questions already in the chat, and I'm going to direct some of those between CEO Juvane Brownie, Gina Delisier, and our company secretary and head of shared services, Rachel Brownie. We will take maximum 2 questions per shareholder or media. And I would just like to say, David and Josimar, I see you, Lisa sees you, Juvane sees you, and the questions that we do not get to today, we will be certain to reach out to you right after and have the answers to your questions quite readily available to you. But let's start with a few. Juvane, OneGS had $10 million fair value credit due to the earnout target for the contingent consideration not being met. Without this fair value credit, OneGS would have $4.71 million in net profit from $102.4 million in revenue. Do you see OneGS being able to achieve better margins going forward? Juvane?
Thanks, Daniel. Yeah, I definitely do. And I think we see that already in Q2. If you look on Q2, Q2 doesn't have that. There's no one-off in Q2. And we had 100 and I think the profit margin was up in Q2 as well. So if you look on that, you see, so the short answer is yes. We had $9 million in profit in Q2, round up to 10 actually. And so the short answer is yes. I see it going up and I expect for it to keep going up.
Yeah,
And
thank you so
can see
much.
that in what's been published in Q2.
For Q2. Thank you so much. I'm going to take David's next question. How has the shared services framework improved cost management and business synergies? Also, will the shared services framework be the key base for the future acquisitions? And to answer that question, I'm asking Mrs. Rachel Brownie to join me here.
Sure. Thanks for that question, David. In terms of how shared services has improved cost management, starting in October 2025, we did a very comprehensive audit of our operational expenses and all our recurring expenses. And we basically cut those that were no longer necessary or those that we found a different, more efficient way, to deal with them. So we've been very serious about cost containment. And in terms of being the base for future acquisitions, that is a part of the overall vision. We spoke to it in the video a bit, but just to reiterate that we are prepared to scale. We have meticulously documented our processes over the last year. We have built out our SOPs, and we are ready and waiting to support our various brands. And yeah, we don't have to rebuild everything from scratch. So that's how we're going to garner the efficiencies. Yeah.
Thank you so much for that, David. We will ensure to respond to all your questions that you have put forth. Juvane, Josimar Scott has asked, how has OneGS's investment in technology helped it respond to changes in the global media services industry? How does that investment impact operations? Juvane?
Yeah, thanks, Daniel. Thanks, Josimar. All right, so I want to just be clear. So in the presentation, we spoke a little bit about our investments in technology last year. A large chunk of our investments in technology last year was in the DRT media monitoring arm of the business, right? So we have an arm of the business that monitors media, that monitors everything that's said on our TV stations, our radio stations, everything that's published in our newspapers, everything that's published on social media, on YouTube, on Instagram, on TikTok, on the TikTok, right? So we have infrastructure in place that monitors that tracks it, looks for keywords, and then presents reports to clients. So that's something that we acquired last year in the DRT acquisition, and we have ongoing costs related to that would show up in our gross in our direct costs, right? So it shows up in our direct costs there. Now for the operation side, if you look on it, you'll see that we are getting more efficient year over year on that side, and a big part of that is how we leverage technology that exists right now. So we have a whole AI initiative where we have AI champions in different brands that we have, and we bring them. So we have selected AI champion in each brand, and they are responsible for talking to the team, because oftentimes the team is evolving faster than the organization can. So we have the team who is actually in the work, doing the work. They meet together regularly, and they'll say, here are the things that we've been doing. Here's the processes that we've been using. Because at the end of the day, like, we're seeing a lot of AI stuff right now on the internet, right? You're seeing it everywhere, right? And so the objective is not, the money don't want to pay us the kind of money that they pay us for us to generate AI stuff. Like, whatever we do, it has to be like top quality work. It has to be better outcome, more consistent delivery when the work comes out. And so when our team works and they implement technology, including the use of AI, the outcome has to be better outcome, better results for the client. And so that's the first thing there. So they will document what they're doing, and then they will share that across the board with the other teams. And so where we are with that right now is finding the things that work, the tools that work, putting in the processes to get the maximum results out of them, not just the quickest, but the best results, and then putting that to work across the board for the team. So that's what we're doing right now in terms of our AI adoption. And I think we're doing a very good job in that side. Now, looking forward, we have our next layer that we're going to put on. And DT, you spoke a little bit about this in your part of the video, where we now take the developments that we have in technology and layer that on top of some of the things that people have been doing manually to kind of take that stuff further. So we are now scoping and planning and doing our business cases for some further investments in technology that we believe will transform sectors in the region. You might have heard us say that already. It's written down in what we have published before, and we said it last year. Those are things that we're actively working on right now, which is, proprietary technology that we will have that will transform some of the industries. And Josimar, you'll be one of the first to hear as soon as one of those are closer to being ready, because I'm sure you're going to want to talk a little bit about that.
I want to acknowledge what I think is a statement from Paul Taylor. Paul has said, management has stated that 60% of revenue historically came from North America, and that expansion into Europe and Australia is underway. Non-SEO services has surpassed SEO revenue for the first time after DRT was integrated. So I just want to thank you for that observation. If there was a question to go with it, please feel free to write it here, but thank you for that, Paul. We do have a question here for Gina, a very, very excited shareholder, it seems, or panelist. Wants to know, is the pickle tourney happening again in 2026? How do sponsors get involved? When is this likely to take place? And really, is it happening, and how do people participate? Gina?
Thanks, Daniel. I'm happy to say that, yes, indeed, our Do Good Pickle Tourney in collaboration with Myers Fletcher and Gordon is indeed happening again this year, October 3rd. So please save the date. We're really excited about doing this initiative again. We're looking forward to more support from the business community, more teams. We're getting more more playtime, so we can expand the number of teams that enter. And we're really looking forward to some really awesome prizes and just the collaboration. Also looking forward to our wonderful MC returning, or prized MC returning, Daniel. And we just really think that
didn't she actually contribute? She raised extra money last year, right?
Yes,
So if you're coming
we're
out,
looking
walk
forward to
with
that
your money.
again.
Yes.
Yes,
So-
that was in fact true, and I do encourage those because I will find a way to get into your pocket. Somehow I even inveigled children to go to their grandparents and get more money. We were in it to win it as a group last year.
But if
Gina, thank you
anybody
for that.
wants-
I don't even know if we cut you
No,
off, but I
Gina
think we
wasn't
just
done.
got
Gina wasn't
excited
done.
about our
sorry.
pickle tourney that's coming up soon.
Anybody
Javane, are you
who's
saying something?
interested in and wants to enter teams or you want to become a sponsor, just please email robin@onegradestudio.com. Robin, just putting your email out there. So if anybody wants to inquire more, we also have a landing page on our website. So please do check that out.
The pickle tourney is it's really an exciting day. It's a day where we really focus on the part of One Great Studio where we do good. We invite our clients, our shareholders, our team members to really join together with hearts and hands to do good. Ladies and gentlemen, I recognize, especially David and Josimar, we're so glad to have you. We have a lot of questions and we will be certain to answer many of them, all of them, right after the AGM. I'm going to invite our chairman to rejoin me here. Chairman?
Thank you. Thank you, Danielle. Thank you to all our shareholders for such thoughtful questions today. They'll continue to shape the thinking of both management and the board. We'll now move to the vote on the resolution to adopt the audited financial statements for the year ended 2025, together with the reports of the directors and auditors.
Chairman, we've reached the resolutions portion of today's meeting. To those now joining us, here's a recap of how voting will take place. Once a resolution has been moved and seconded by shareholders representing the required quorum, voting will take place on Zoom. Shareholders will have 60 seconds to cast their vote. To move a resolution, please use the platform's raise hand feature. To vote, select for or against. Chairman, we will begin with Resolution 1. That the audited accounts for the year ended December 31st, 2025, together with the report of the directors and auditor, be approved and be hereby adopted.
Do I have a proposal?
Lorianne Evelyn,
Do I have a seconder?
Gina Javane Brownie.
I now put the resolution to the meeting.
The resolution is on your screen. You will have 60 seconds to vote electronically. Please select for or against. Excuse me. Chairman, I can confirm from the company secretary that among the shareholders present in person, online, and by way of proxy, we have 24 persons for and 0 against.
The votes in favor have it. I declare the motion carried.
We'll now move to Resolution 2, addressing the re-election of directors. In accordance with Article 114 of the company's Articles of Incorporation, 1/3 of the directors, those longest in office since the last election, retire this year. The retiring directors are Rachel Brownie, Simone Bowie-Jones, and Mark Ramsey. Pursuant to Article 117, all three offer themselves for re-election. Their profiles can be found on page 16 through 18 of the annual report. Chairman, Resolution 2A, that Rachel Brownie be and is hereby elected a director of the company.
Do I have a proposal?
Lorianne Evelyn, and seconded by Gina Delisier.
I now put the resolution to the meeting.
Your resolution is on your screen. You will have 60 seconds to vote electronically. Please select for or against. Chairman, I can confirm from our company secretary that among the shareholders present in person, by way of proxy and online, there are 25 votes for and 1 against.
The votes in favor have it. I declare the motion carried.
That Simone Bowie Jones, Resolution 2B, that Simone Bowie Jones be and is hereby re-elected a director of the company.
Do I have a proposal?
Dorian Evelyn and seconded by Gina Delicia.
I now put the resolution to the meeting.
The resolution is on your screen. 60 seconds to vote electronically. Please select for or against. Chairman, I can confirm from our company secretary that we have 22 for and 3 against.
The votes in favor have it. I declare the motion carried.
Chairman, Resolution 2C, that Mark Ramsey be and is hereby re-elected a director of the company.
Do I have a proposal?
Lorianne Evelyn, seconded by Gina Delicia.
I now put the resolution to the meeting.
The resolution is on your screen. You'll have 60 seconds to vote electronically. Please select for or against. Chairman, I can confirm that the company secretary states that between online proxy and in person, there are 24 votes for and 1 against.
The votes in favor have it. I declare the motion carried. On behalf of the board, Thank you to all our shareholders. This continued vote of confidence. We'll move on to the next item of business.
The next resolution before the meeting is resolution number 3, that the shareholders of the company hereby delegate their power pursuant to Article 107 of the Articles of the Company to the Board of Directors of the company, which is hereby authorized to fix the remuneration of the directors for the year. Do I have
a proposal?
Sean Taylor,
Is there a seconder?
Simone Bowie Jones?
I now put the resolution to the meeting.
The resolution is on your screen. You have 60 seconds to vote electronically. Please select for or against. Chairman, I confirm from our company secretary that among the shareholders present in person and by way of proxy and online, there are 26 for and 0 against.
The votes in favor have it. I declare the motion carried.
Chairman, we now present resolution 4, that Crichton Mullings and Associates Chartered Accountants, having agreed to hold office as auditors of the company, be and hereby appointed auditors of the company to hold office until the next annual general meeting at a remuneration to be fixed by the directors of the company.
Do I have a proposal?
Robert Evelyn,
Do I have a seconder?
Lorianne Evelyn.
I now put the resolution to the meeting.
The resolution is on your screen. You will have 60 seconds to vote electronically. Please select for or against. Chairman, I confirm from our company secretary that among the shareholders present in person by way of proxy and online, there are 26 votes in favor and 0 against. 24 votes in favor, my apologies, and 0 against.
The votes in favor have it. I declare the motion carried. Ladies and gentlemen, that concludes the formal business of today's meeting. On behalf of the board and management, thank you for your engagement, your questions, and your continued support for this company. We are excited about 2026, where 2026 is heading, and we look forward to building that future together with you. This meeting is now formally terminated.
Thank you.
Thank you, guys.